Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Well, the Russians say a lot of things. They talk about the ruble being part of a basket or creating different baskets. It's very confusing what Russia says. Russia has a decent amount of reserves, but if you've noticed that reserves have gone down tremendously with the fall in commodity prices. Needless to say, they're rebuilding a bit here. But Russia has absolutely nothing to stand on but commodity prices. And part of this, I think, this floating of these balloons of currencies is just to try and juice the U.S. Administration to increase stimulus. China and Russia are desperately in need of global demand returning. If global demand does not return, commodity prices continue to sink. There's already rising social unrest across Russia, is even being challenged in some places. There are even, some protests against Putin. And as I've said before, if you protest in public against Putin in Russia, you have to be pretty determined because they don't take that too lightly. They beat you up pretty well. If that happens. So they're starting to see that. So back to the point, if there isn't a rebound in global demand driven by the U.S. becoming and again, this is why the U.S. is playing this game of stimulus, and I think these are political footballs to try and force the U.S. to increase their stimulus. If there's not a rebound in global demand, the social pressure inside Russia and China increases tremendously. And these are leaderships, autocratic leaderships, and that's the worst thing to them. So they're throwing out all kinds of stuff like this to try and urge the U.S. to, continue to stimulate more and more. I think that's the goal, because I don't think they seriously believe there can be another financial system. And just think about it logically. In the midst of this morass, with all the leverage out there in the system and all the potential problems still facing us, is it legitimate for the world to get together and say, hey, we're going to create a new monetary system? It makes no sense whatsoever.
Good point. That's a very good point. Yeah, you can't build a new monetary system right now, no. Luke has a question. Which major currency do you think is likely to crash should there be a currency crisis in the not very distant future?
Well, it depends on how the shape of it comes about. There's no doubt you can draw scenarios, and we have, that the U.S. dollar is the one that crashes. Based on some of the politics we've seen and some of the total disregard for the reserve status that the U.S. has, there's scenarios there. But again, because of the financial and social pressures building in Europe, we think the problem will flow from the euro. That's number one on our hit list, obviously, and we're playing that long term because we think the risk-reward potentially tremendous.
Okay. And Chalmers has a question for me about defining European exercise. European exercise means that if you buy an option, you cannot exercise it until expiration. Really, it's just more of a technical consideration. Remember, most options, when you buy them, as Jack said, if you change your mind, you can always close out of them, means you can always sell them. So the fact that they're European exercise is really something that comes from the index world, where it makes it easier for market makers to actually price these options. But other than that, I wouldn't really worry about it much because you can always close out of them anytime you'd like. Question about liquidity. Liquidity's been growing. I think if you look at the bid-ask spreads, they're very reasonable. And as Jack said, if you're looking out for a couple of days, probably not going to be the product for you. But if you're looking at weeks and months, all the way out 10 months, a 30-cent spread for something you hold for 5, 6, 7 months is really not excessive. And sometimes the spreads are as low as a dime. So again, take a look and start. Hopefully you have an equity options brokerage account. If you don't, I'd open one or at least start following it. Jack, do you have any closing points here? I want to, first of all, thank you. Again, every presentation you give I learn more and more. Just wonderful, tremendous insight. So I want to thank you. But sure. Can you give us some closing comments? Again,
the comments would be, this is a scenario, and we think the even if part of this plays out, meaning that the pressure grows so great, and we have a potential meltdown in some of the Eastern European countries and even some of the banking systems in Europe, there's going to be huge damage to the euro, we believe, in a big way. So the trade works from that standpoint. We don't have to see the worst case scenario of people running from the union. Steve's point and some of the others made, it still behooves them, given the interest rate, to stay within the union at the moment, but that doesn't mean the euro will continue to work, given the pressures that are building. And again, this is a scenario. We have to watch to see how the market plays out, and Steve and I had talked about this on one of the last webinars. If you can build scenarios in your head like this that are plausible, that you can see the probabilities of them happening, and then you watch the market every day, or at least keep an eye on the market, you can see some of these things clicking into place as you read the news. But if you don't have the scenario and don't understand just some of the basic outlines, the news will go by and you're missing it. And so that's why I think it's important to see this. And so if you have the basic scenario in your head and understand some of the basic structural concerns, when you're watching the news, you can evaluate this and say, hey, this is starting to come into play more. This trade is setting up. It makes more sense to me now. Or, hey, this is coming into play. Demand is improving. Germany's starting to fund the zone more. This scenario in my head that Jack had talked about isn't going to play out. So I think there's an importance both ways to have these scenarios, and that's why we share them with you.
Well, as I said, first of all, the questions are amazing, because I learned something about the questions because the way you answer them. But just the content that you provide is just very, very interesting. A wealth of knowledge that you offered to all of us. So thanks again, Jack.
Sure.
I want to remind everyone, please go to Jack's website, www.blackswantrading.com. Again, you can sign up for the Currency Currents, the daily free global macro commentary. You get it every morning, and it's free, so why not sign up? And then, if you're interested in the tactical trading, Jack has that also. So it's a daily subscription, and you could that's a paid service. Please sign up for that. And if you just want to email Black Swan, it's info@blackswantrading.com. Jack, thanks again. Really appreciate it.
Thank you, Steve. Thank you, everybody, for hanging out. We really do. I do appreciate it.
Thanks. Just want to remind everyone that we have more webinars coming up, and Jack will be back. Jack's going to be back on June 16th, talking about dollar versus yen. Is it over for the carry trade? We know the interest rate differential is very, very slight, but Jack will talk about, and this is real, as Jack was just saying, some of the reasons, if you follow the story each and every day, you're going to understand it better as these pieces start to move in certain ways. So, you're going to want to follow along, and you see all the interesting topics that Jack will be presenting. He'll be talking about China on June 24th, and then on July 9th, why are fundamentals important for currency traders and how to develop a view, so don't miss that one. And then more about using intermarket analysis and probabilities on July 16th. So Jack's going to be back very frequently at the ISE. If you want to listen to this again, you can go to www.ise.com/archives. There's lots of presentations there. Next week we have John Person with us, but Jack will be back very, very soon. I want to thank all of the attendees. You guys, we had a great audience today. Some amazing questions. You make a lot of this webinar by the questions that you ask. Jack does an incredible job in answering them, but it helps. Because he can only go so far with the slides. It really helps to have some questions that are timely and relevant, and Jack always comes up with a great answer, very, very straightforward. So, Jack, thanks again. Really appreciate it.
Thank you, Steve.
Have a great night. This is your host, Steve Meisinger, from the ISE, saying thank you very much, and please join us again next week, where we're going to have John Person on June 9th, and then June 16th, Jack will be back, as I said, talking about dollar versus yen. So thank you, everyone, and have a pleasant trading day tomorrow. Good night.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.